This is Tim Phillips, Chief Investment Officer at Phillips and Company Advisors, and I'd like to welcome you to our China A Look Ahead Q1 2022. Please read all the disclosures carefully. With all the geopolitical noise between the United States and China and a global competition, it's important we reset why we invest in China. The themes are pretty clear. One, China represents the largest growing middle class in the world. With the right policy support, they expect to have 72% of their population in the middle class. Kind of call it an olive shaped population to wealth. And that global middle class is representing a much larger and larger share of consumption. With the exception of India, China is going to be a major driver in middle class expenditures. One of the things that's going to fuel that is China's growing middle class, very large share of household savings. As the Chinese consumer gains more and more confidence in themselves, their jobs, and their economy, we expect those savings rates to be spent down in 2022, which should fuel more corporate earnings growth. The fourth major theme is China is underweighted by almost nearly any measure, specifically China A, or their domestic stock market, is 12.4% of the market cap of the world. Yet it only represents 0.6 tenths of a percent in the MSCI AC World Index. We expect continued capital flow and more indexing of the domestic stock market, which should boost those share prices in the years to come. Those are the major themes driving our interest in investing in the China domestic stock market. The major themes we expect in China for 2022 are really threefold. One, we expect planned investment, residential construction, infrastructure spending to begin to trend down to back to 2007 levels. Now, that could be contractionary for GDP unless it's managed properly. Now, simultaneously, we expect this common prosperity theme that the Chinese Communist Party is emphasizing to really drive more disposable income into the middle class. And you can see that gray bar, that middle 20% increasing, and that upper middle 20% increasing. That should more than make up for a slowdown or a managed decline in the property sector. That's their theme of common prosperity. Their other theme is dual circulation, expanding out in the world while stimulating a stronger middle class consumption oriented economy. To expand in the world, there'll be two major themes to think about. The RCEP, or the Regional Comprehensive Economic Partnership, that has China working with other regional trading partners in 15 countries. That bloc will represent 30% of the world's GDP and 27% of the world's global merchandise. This is no small matter when you think about dual circulation export, which drives better jobs in China. And finally, just as a point of order on dual circulation and being strong in the world, China now has trading partners with 124 countries compared to the United States with only 56. Their Belt and Road Initiative over the last 10 years has had a tremendous impact on global trade and economic power throughout the world. When it comes to growth rates, China will see moderating growth rates from prior years, probably in the range of 5 to 5.5, maybe 6%, according to best estimates. Much of that growth will be in the form of household consumption, which confirms that common prosperity theme we talked about in the prior slide, and you might see a small decline in public and private planned investment. Now, in that transition, China is coming off a stellar year of corporate earnings growth, and we should see some muted earnings per share growth this year with 6.1% full year earnings per share growth and very modest growth in Q1 and Q2. That would, in of itself, be a point of concern. However, when you look at valuations, China is trading at its largest discount in terms of valuations to the United States since the 1960s on a CAPE basis. That's incredibly cheap relative to growth rates. Like the US, China also had a stellar year of stock buybacks. Companies bought back their shares, reducing share counts, and I believe that will increase earnings per share in Q1 through Q4. So it should be a great year for earnings boosts with expectations being set very low for China. Now, one might think when they look at those earnings per share numbers that it looks very muted. And intuitively, that's very correct. Counterintuitively, one of the things we do expect based on where China is in the business cycle is to see domestic macro policy support, meaning lower interest rates, lower reserves for banks, more fiscal stimulus to small and mid-sized businesses, and perhaps even bigger budget deficits, which China hates running, but they will increase those deficits to support their economy and support their consumer. So that's really giving us lots of optimism as they emerge out of COVID, return to potential normal with more fiscal and monetary support. One thing investors should think about, and is a benefit to them, is that China is at a different stage in that business cycle, and it's a little more counter-cyclical than the US. So the benefit of investing in China, it offers a little bit more of diversification and certainly less correlation to US macroeconomic policy. So our views and recommendations are framed by some key questions. One, the 20th Party Congress will launch sometime in the fall, and will they usher in President Xi for a third term? That's historic. Will we continue to see purges within the Chinese Communist Party's leadership to strengthen Xi, or will it weaken him in the run-up to that fall Congress meeting? One of the things you're seeing throughout the globe is a management of the data economy. Countries, especially China, are trying to manage their citizens' data. And that can be very positive if regulated properly, or very negative if over-regulated. Let's see how that plays out. How large will that fiscal and monetary policy support stimulate more growth? We're going to watch that. Again, looking for tax cuts, lower interest rates, looser banking reserves, and stimulus to small and medium-sized enterprises. All that's important. Our view is China will benefit from all of that fiscal and monetary support and will look a little more counter-cyclical to the United States. I think this last year, when 2021 had a period of excessive policy reform, I believe that's going to ease as Xi approaches the 20th Party Congress and tries to secure himself a third historic term. Themes like common prosperity and dual circulation will begin to seep into the Chinese population and improve consumption trends. Notwithstanding the various bouts of COVID, China manages COVID much different than the United States with a zero tolerance lockdown policy. Our recommendation is simple. We'll continue to focus on China A-listed companies with areas of opportunity wishing to benefit from dual circulation and common prosperity. On this page, I've highlighted the current holdings as of this recording within our China A SMA. And you can see the macro themes that we focused on and the whys. Just a couple names: Cadeler, Contemporary Amperex. This is one of the world's largest battery makers and a almost exclusive supplier to Tesla. Anta Sports would be something equivalent to the Nike of China. You've got Longai Green, one of the world's largest solar panel makers that's both dual circulation and common prosperity. Proyac Cosmetics is a leading provider of cosmetics, health, and beauty care in China, and that certainly will benefit from common prosperity. SF Holdings is like their equivalent of FedEx. Its goods and products delivered in an efficient, safe, and cost-effective manner, which is upstream from all of the other companies. Those are just a few names, and of course, connect with us or your advisor if you want to learn more about the names we highlight here. I'd like to thank you for taking time to listen to our Q1 2022 China Look Ahead. You can click a link here to look at our Q1 2022 Look Ahead series for the US. Of course, please feel free to email me at the link here or connect with your advisor at any time. On behalf of all of us at Phillips and Company Advisors, I'd like to wish you and your family a healthy, happy, and prosperous 2022.